Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into Camber Energy's latest filing, and let me tell you, it's a real page turner. Get ready for some twists, turns, and maybe a few numbers that'll make your head spin. So we're going to break it down to make it simple. This report is essentially Camber Energy saying, oops, we need to fix some things. They're restating their financial reports from earlier in the year, and it seems like their subsidiary, Simpson Maxwell, wasn't exactly following the rules when it came to recognizing revenue. Buckle up, it's going to be a bumpy ride. First things first, this isn't just your regular quarterly report. This is an amendment, meaning they're redoing it. They messed up the numbers in the original report, so they're issuing a revised version. Specifically, they are restating their financial statements for the 3 and 6 months ended June 30 earlier this year. The problem, it all boils down to Simpson Maxwell, Camber's subsidiary. They changed how they were accounting for revenue, but it turns out they didn't do it right. They were recognizing revenue at different milestones, but the company says those milestones didn't meet requirements and the related costs weren't recorded correctly. Because of these issues, Camber had to go back and fix a few things. They amended some of the financial results and analysis to reflect the proper accounting. Alright, let's dive into the financials. This is where things get interesting. Looking at the balance sheet as of June 30th. Accounts receivable. The money owed to them is about $6.5 million. This means that they aren't so good at getting cash right away. Their inventory is roughly $9.5 million. This is what they have ready to be sold. In total, their current assets are $17.2 million, a bit less than the $19.6 million they had at the end of the previous year. That's not the best sign, since it means that their short-term assets are shrinking. Fixed assets, like their equipment, are at $1.5 million, a bit less than December. Goodwill is at $34.8 million. This is an intangible asset that represents the premium paid for Simpson Maxwell. It's a large number, so it means they paid a lot to acquire it. Overall, total assets clock in at $80 million, down from $83 million at the end of last year. On the other side of the balance sheet, accounts payable, what they owe to others, is around $9.8 million, up from $6.7 million at the end of last year. It means they need to pay a lot of people. Accrued expenses, things they have to pay in the future, is at $8.8 million, less than $10.9 million. Their total current liabilities are $33.1 million, higher than the $31.7 million at the end of last year. They have a long-term debt of $38.8 million. All in all, total liabilities are $77.8 million, showing that they owe a lot. And here's a big one. The accumulated deficit, which is all of their past losses, is a whopping $1069 million. It tells us that the business overall across its lifetime is really struggling. Their stockholders' equity is just $2.1 million. This is not ideal. Now let's switch over to the income statement, which shows how profitable the company is. Looking at 3 months ended June 30, power generation revenue for the 3 months was $6.1 million. Revenue from service and repairs was $3.3 million. However, oil and gas sales were pretty minimal at $27,000. Total revenue was $9.5 million for the quarter. It's important to note that a 35% increase compared to the $7 million for the same period last year. But looking at cost of goods sold, it cost $7.1 million to achieve that $9 million, making the business barely profitable at face value. And they also spend almost $4.4 million on general and administrative expenses, resulting in a loss from operations of $2.1 million. And they pay more than $500,000 in interest. The net loss before income taxes ends up at $3.4 million. The company basically lost $3.4 million for the quarter, down from a loss of $1.2 million, and the loss per share of common stock is 2 cents. Zooming out, for the 6 months ended June, the story is the same. They lost $30 million during the period. Cash flow is terrible too, with negative $1.4 million in cash flow from operations. Only the financing is helping keep them afloat. Okay, so those were the financials. Now let's quickly touch on a couple of other important things in this report. There was a merger from last year, but it didn't really improve things. Basically, Camber is trying to do a lot of different things: power, energy, waste disposal, etc. Having diversification is helpful, but it also comes at a cost that can dilute efforts. Perhaps the biggest red flag is that the company's auditors are raising serious concerns about Camber's ability to continue as a going concern. That is, will they be able to stay in business with a huge accumulated deficit and a working capital deficiency? It's a valid question. They are also facing legal action. The company's also dealing with some legal headaches, including a lawsuit from a shareholder. There's the potential for future litigation. Also worth noting that company themselves found material weakness in financial reporting controls. There's approximately 272 million shares of common stock outstanding. So each shareholder owns on average 0.000000366666666% of the company. There is no real information on market risk. The signatures of the company's officers confirm the report's contents. The overall story here is that while sales increased 13% and the business is diversified, it is barely profitable. It has lots of liabilities and is burning cash. It really needs to focus more on its core business or get more efficient at the current ones. The equity in the business is barely any. This is not a good sign and will limit the long-term upside to the company. All things said, there's a lot of uncertainty with Camber Energy. The company needs to show it can effectively run the companies that they acquired. Camber Energy is struggling to improve from their weak position. Thanks for tuning in to Corporate Decoder. If you found this video helpful, give it a thumbs up, leave a comment, and of course subscribe for more deep dives into the world of finance.